Welcome students. So today I am present here to provide you a solution of numerical 41. Clear? So it is on demand. So it is this numerical is related to past adjustment. So the numerical is question number 41. So firstly we have to read a numerical or question. So the question is Anil, Sunil and Sanjay have omitted interest on capital for 2 years ended on 31st March 2016. Their fixed capital in 2 years were Anil rupees 8 lakh, Sunil rupees 7 lakh and Sanjay rupees 3 lakh. So rate of interest on capital is 10% per annum. Their profit sharing ratio were in first year 4 is to 3 is to 1 and in second year 3 is to 2 is to 1. So we have to make a journal entry, adjusting journal entry at the beginning of next year. So for making in this question the interest on capital is omitted from last 2 years, means from last 2 years interest on capital is not given to the partners. So it means we have to rectify this transaction. For rectifying this transaction, there is also a profit sharing ratio mistake. So their profit sharing ratio in two different years are changed. In first year, their profit sharing ratio is 4 is to 3 is to 1, and in second year, their profit sharing ratio is 3 is to 2 is to 1. So firstly, we have to make a uh, analysis table. So for making an analysis table, we have to prepare a format for analysis table. Look at analysis table. So particular Anil, Sunil and Sanjay, there are 3 columns for the partners and the total column which shows the firm expense and income. Clear? So now come to the interest on capital which is omitted to pay to the partners by the firm. So firstly we have to pay an interest on capital to the partner. So that's why we write interest on capital in particular as a credit balance. Why we have to write interest on capital as a credit balance? Because if interest on capital given to the partner, then it will be shown on credit side of partner's capital account, so that it will be credit balance. And there is also an interest on capital for the second year, it is also a credit balance. So the interest on capital for first and second year will be same because their capitals are fixed. If the capitals are not fixed, then it may be their capital interest on capital will be changed in next year. But their capital are fixed, so that their interest on capital is same in both years. Clear? So in first year 80,000 Anil, Sunil 70,000, Sanjay 30,000. So the total is 1,80,000. And in second year same amount is there. For Anil 80,000, for Sunil 70,000 and for Sanjay 30,000. So the total is 1,80,000. So total of both years interest on capital for Anil 1,60,000, for Sunil 1,40,000, for Sanjay 60,000, and for the total expense for the firm or loss for the firm is 3,60,000. Clear? So now we have to distribute this this loss to the partners, because it is not distributed to the partners. So we have to distribute this loss. Now we have to distribute the loss which is loss for the firm. So it will be distributed in first year as 4 is to 3 is to 2, and for the second year it will be distributed in the ratio of 3 is to 2 is to 1. So in first year you can see in the your screen, in first year it will be 80,000, 60,000 and 40,000, and in second year it will be 90,000, 60,000 and 30,000. So after this distribution, we have to make the total of both 2 years. For the Anil is 1,70,000 and for the Sunil is 1,20,000 and for the Sanjay is rupees 70,000. So we have total of both year distribution of loss. Now we have to compare with the distribution of interest on capital, which was a credit balance, and distribution of loss, which is a debit balance. So we have to make a difference. So you can see in Anil the credit balance is 1,60,000 and debit balance is rupees 1,70,000. So debit balance is more than credit balance. So the answer is 10,000 debit balance. And in Sunil the credit balance is 1,40,000 and debit balance is 1,20,000. So there is also there is credit balance is higher than debit balance, so that the difference is 20,000, which is credit balance. And in Sanjay the credit balance is rupees 60,000 and debit balance is rupees 70,000. So the debit balance is more than credit balance, so the difference is 10,000 and debit balance. So we have to make a journal entry for this adjustment entry, because the one single entry will correct this mistake in next year. Clear? So we have to make a journal entry. Both the debit partners will be debited and the credit partner will be credited. So the journal entry is Anil's current account debit, Sanjay's current account debit to Sunil's current account. Here we use current account because the partners' capital are fixed. If partners' capital is fixed, then always we have to make journal entry with the current account. So if you like video, please like and share and subscribe my channel. Thank you.